Today's hearing, as usual, is in the hybrid format. Witnesses are in person. The witness, Commissioner Gensler, nice to see you, Chair. Our witnesses the members have the option to appear in person or virtually. Welcome back, Chair Gensler, to this committee. Workers and their families don't measure the economy by the stock market. Neither should we. It's why in the Senate and in the new Biden administration, we work to create an economy that delivers results for people who get their incomes from a paycheck, not an investment portfolio, raising wages in good-paying jobs and lowering costs. It means fighting the corporate price gouging that so often hurts consumers and the unfair labor practices that so often hurt workers. It means investing in American manufacturing, the workers and farmers who drive it. It means making sure our financial watchdog keeps our economy and our markets stable. At the SEC, that includes going after companies that try to cheat the market. Chair Gensler is doing that very well. It means strengthening corporate disclosures to stay ahead of risks like climate change. It means looking into the practices of private equity and hedge funds as they stretch their tentacles into more and more areas of our economy. It's been an eventful year. This summer, the Senate confirmed President Biden's two nominees to the SEC. I know both new commissioners got right to work on the many issues before this agency, and the commission, its dedicated staff, have been busy. Republicans on this committee have bellyached, and I assume will today, about your ambitious agenda. If Wall Street and its allies are complaining, it tells me you're doing your job. You put America's savings first. You focus on transparency and fairness, two concepts critical to making sure our markets work for everyone, not just insiders, not just corporate execs. The SEC must continue making enforcement a priority. Bad actors are always coming up with new schemes to separate people from their hard-earned money or to cheat the rules to gain a little bit more for themselves. Under your watch, SEC's increased prosecution for insider trading, which, as of course you know, under the Trump administration had fallen to the lowest level in a generation. In April, this committee considered a Reid-Menendez bill that would outlaw insider trading in statute. The House has already passed a similar bill. The Senate must. Last month, we saw the successful results of bipartisan work of our committee members to improve transparency and fight fraud. In 2020, Senator Kennedy, who's sitting to my left, more or less, and Senator Van Hollen pushed for the passage of the Holding Foreign Companies Accountable Act, a bill to stop the U.S. stock exchange trading of foreign companies with China-based auditors that refuse to comply with our oversight laws. Because that law jump-started negotiations, the Public Company Accounting Oversight Board signed an agreement with Chinese authorities that will finally allow auditors to begin inspections. In March, the President signed an executive order establishing a whole-of-government strategy for digital assets. While agencies across our government look at how we respond to the growth of crypto and best protect Americans' money, we know the SEC continues to enforce the laws, going after crypto tokens that violate security laws, shutting down crypto Ponzi schemes, charging insider trading crimes in crypto. Over the last year in the Banking, Housing, and Urban Affairs Committee, we've looked at how crypto assets are used in scams and frauds and play a role in illicit finance. We heard from Treasury Undersecretary who testified on the President's Working Group report on stablecoin. This morning, the Ag Committee downstairs, and Senator Smith and I on this committee, on the Democratic side, sit on both these committees, is considering a crypto bill sponsored by Senators Stabenow and Boozman that focuses on digital commodities. I appreciate their work to create regulation in the crypto space. It's critical, though, that we are careful and deliberate in drawing jurisdictional lines. In this kind of regulation, we have to prevent gaps and close loopholes that can be exploited or abused. It's not easy. It's why action by the Agriculture Committee and the Commodities Future Trading Commission, an agency Chair Gensler is very familiar with, why that action is welcome. But we also know it's not enough. When Congress wrote Dodd-Frank, we fixed the problems in the oversight of over-the-counter derivatives market. It's a lesson we need to remember, thinking of the damage that was done when it comes to crypto. Our regulators need to work together to make sure investors and consumers and market stability come first. SEC's work on climate risk disclosure is an important example of how to improve the market's understanding of risk and to provide transparency and comparability. Clarity and uniformity are key. If only a subset of companies provides disclosure, and they do so in whatever form they want, That doesn't serve anyone. Investors outside the U.S. already benefit from standardized climate risk disclosure. It's time the U.S. market did as well. The SEC's recent rule proposal to require more disclosure about corporate stock buybacks will also bring much-needed transparency to the market. Thank you for that. We know stock buybacks are a big problem. They distort the market. They funnel profits to executives at the expense of long-term investment in workers and in innovation. The process allowed for these buybacks has only made them more manipulative. For decades, companies have been able to announce stock buybacks to juice their stock price, but then they only provide details months later on how, when, and even whether they were even completed their plans. Under SEC's new proposal, the market and the SEC would understand when companies are buying their stock and if executives are buying or selling at the same time. Taken together with unprecedented steps in the Inflation Reduction Act to finally tax these buybacks, and I appreciate Senator Tester and others on this committee supporting that. These are the first real steps we've seen in years to rein in this Wall Street scheme. Another example of a new president of the United States who fights for workers and sides with workers. Chair Gensler, I look forward to hearing more about other ways the SEC is working to hold bad actors accountable and protect Americans who invest their hard-earned money in the markets. Senator Toomey.